Shares of Life Insurance Corporation of India made a tepid debut on Dalal Street today. Remember, there were a lot of expectations. This is the mega blockbuster IPO and was subscribed nearly 3 times in its 6th day of subscription period. Now, the listing, meanwhile, took place at a discount of close to 9% to its issue price and finally settled at about 8% on the NSE. 872.70 was the final price for shares that were issued at 949 rupees per share. Now, retail shareholders as well as policyholders did receive a bit of discount, but even if I look at their discounted issue price, they also would have ended the day with a slight loss to issue price. At listing price, the market cap of LIC now stands at just over 5.57 lakh crore rupees. This was very much in line with expectations, as a majority of big IPOs have not given strong listing gains recently. We spoke with the stakeholders today, including M.R. Kumar, chairman of LIC, who believes that the national insurer will continue to grow better than the industry, while DIPAM Secretary Tuhin Kanta Pandey says focus was put on getting the size and valuation right. Let's first listen into them.
Aspirationally, we would like to grow BNB to quite a let's talk about products. Once we start introducing the products, I've already started training the 1.37 lakh agents to sell 13.7 lakh agents to sell those kind of products. And let me tell you that LIC, as in the past, had a lot of non-par. In fact, in the 60s and 70s, we were selling only non-par. But then customer preferences change. Then Indians generally look for some return. They look for savings. So selling insurance meant that we talk about not only protection, we talk about the savings element as well. So people have bought insurance in the past more for the savings rather than for the insurance cover. Exactly. So now that is changing. And I think a lot of people are aware. The awareness has changed. A lot of youngsters believe that term is the right product to take. And we have seen a lot of uptake in our term products.
Now that company is listed, one of the things which investors will obviously demand is the profitability bottom line.
Three things that matter to us are, that we be strong on sales. We have done well in the month of April. February, March, April has been very good for us. We want to continue to grow at a rate faster than the industry. And once we grow faster than the industry, irrespective of whether it is par or non-par, we are taking care of all segments.
I think we've been advised by several advisors, and they brought in feedback from around the globe, domestic investors, foreign investors, comparison with other listed players in Asia, comparisons with others, the numbers which have been put out in DRHP. So a very intensive exercise has been going on. And I think it has been, our effort has been to make it fair and attractive price, and not to really try to extract upfront a value which the investors may not be willing to number one, because LIC is an organization which is coming into the shareholders domain just now, and I think there are certain expectations that investors might have, and they would like to also look at the performance going forward. So this is something so main thing was right size and the right valuation.
All right, now to understand what next from the point of view of shareholders and perhaps a lot of policyholders who showed a lot of enthusiasm for the issue, I'm joined today by Aditya Kondavar, independent IPO expert. Abhishek Basumalik, Chief Equity Advisor, Intel Sense Capital, is joining us on the show, and I'm also speaking with Pranav Haldia, MD Prime Database. Welcome to all of you, and thank you for joining us on the show this evening. Let me start with Aditya. The IPO story has not had a happy ending on listing day for a lot of scripts. Was there a different expectation from LIC just because of sheer size and the fact that it finally happened? At some point, I think markets were celebrating that it actually finally happened after years of talking about it.
Yeah. So first up, Tamanna, let's celebrate the fact that it's a big day in the markets today. A very big issue size has got listed successfully, and towards the listing expectations, right? I mean, a lot of participants, and the consensus estimate as well was that LIC will have a tepid listing given its huge 21,000 crore IPO size. the nature of IPOs is such that, smaller issues tend to get heavy oversubscription, which tends to translate into a higher premium listing. Now, LIC was a mammoth IPO, and that sort of a euphoria did not play out in LIC. And like you said, it has not been a very happy listing day for all the people who applied. But let's see how the company performs going forward.
Now, let's take a look at some of the reasons. Abhishek, let me come to you on that. It was subscribed 3 times. One assumes there would have been interest in the IPO. It was priced pretty decently, lower than what was initially being projected. Then what do you think has led to these set of circumstances? Is it because of the way markets are? You have a royal in global markets as well? Or is this sort of rating for the company and its business?
So, first of all, thanks for having me on your show, Tamanna. I think, see, the challenge with IPOs in India is that there is a significant percentage of investors who look for listing gains. Now, whether it's a small IPO or large IPO, that is the nature of a lot of our investment community, that they want that listing pop and then they want to get out. LIC as a company, obviously, we've all, there's hardly anyone who has not heard about LIC. So the brand name and the market share, the mind share is phenomenal. So, the subscription part was, in my opinion, the easy part. Now, when you couple that with very weak market sentiments globally, you don't know what is going to happen. I think it's par for course that we saw a very, lackluster kind of opening, and I don't think that in any way reflects the quality of the company or how it can go, how it can do in the future. So nothing to take away from a long-term performance based on the first day.
Pranav, what is the way ahead, and what is your advice to those who have, received allotment of the shares and did not see the listing gains that they perhaps expected? What would be your advice to them now, and what next for them?
And Tamanna, I would like to first come in and talk about a couple of points which you raised earlier. So, I personally do not think it's a function of large versus small IPOs. Not only did this IPO get heavy amounts of subscription, you've seen a lot of other IPOs also getting huge amounts of subscription. And also, in terms of secondary market overall liquidity from institutional investors, from retail investors. So I don't think it's a function of the size of the IPO. We have to keep in mind the fact that not only was this IPO launched in extremely challenging times, and had the government had the option, they would have much preferred not to launch it during these times. And even after it got launched, you had the rate hikes and whatnot, and the last 2 weeks have seen excess amounts of volatility. It is obviously something which impacts the listing. In fact, it is precisely for this reason that SEBI over the last few years has been trying to reduce the gap between issue closing and listing, so that issues do not get impacted, because of change in, because of volatility from the time of issue closing and listing. Finally, I would also say that, to answer your question, that what should investors do? I think, you need to stay on, like I discussed earlier in your show as well. Of course, there is no issue with the company. It's the leading insurer. There is no issue with the promoter, which is the government. So there are no governance concerns. Even on the valuation side, you've seen, the government was very realistic, and you saw a massive come down in terms of the valuation. So I think investors should do well to stay on. At this time, I would also say that you've seen a lot of IPOs in the past which may not have delivered on listing day, but have gone on to give very good returns. So we should keep that in mind as well.
The question that Pranav Haldia raised was an interesting one about the timing of the listing, and would the government have chosen not to do it now if there was a choice? Aditi, you want to weigh in on this, because there was a lot of talk about this as well. It was postponed for a bit. Finally, it was listed at a lesser sort of quantum than what was expected earlier. Could the issuers, in this case the owners, the government of India, have waited for longer?
Tamanna, it's very easy to extrapolate it now, sitting here, after all of those events have happened. The government may not have really expected it to happen that way. The IPO opened in the backdrop of US hiking the rate, US Fed hiking the rate, and of course the RBI also hiking the rate on 280, I believe. Maybe the government could have waited. Maybe the government would have thought that the Russia-Ukraine crisis will weigh on the markets more, and for them, they must have thought that if they delay it any more, then the chances of successfully launching that IPO would get slimmer and slimmer. And that is why also in the IPO valuations and the IPO size, we got 3-4 cut, right? I mean, from the earlier 40 to 16 lakh crores, the valuation came down to 6 lakh crores. And from the earlier issue size of almost 70,000 to 1 lakh crores, the issue size was just 21,000 crores. So again, to answer your question, I think it would have been difficult for the government to pinpoint and say that, okay, this is the perfect time. They just thought that, okay, these tensions are escalating and let's just go ahead and do it.
Abhishek, the question of what this says for IPOs as a whole. If the LIC IPO cannot give you listing gains, this question for Abhishek now. If LIC IPO cannot give you listing gains, then the future of other IPOs in terms of the listing gains spot is now looking as rosy?
Yeah, I mean, that is always the case. If you are, IPOs give listing gains when the market is euphoric. And that is why you will see when markets markets go in a consolidation or a bear phase, you don't find IPOs. So that has always been the case, nothing new in that. Having said that, the other thing is that even in this kind of a market, you might find one or two companies coming out with IPOs who will give you, certain amount of gain. So it is, a lot of it is about the sentiment. It is also about the company that is getting listed. So, you can't do any broad brush painting and say that, if LIC does not work, nothing else will work, or vice versa.
Okay. Let's talk about what next for the investors. Abhishek, you agree that they should also now sit tight?
I don't think so. I mean, in the sense that, if I look at LIC as a company dispassionately, what is working for them right now is valuations, to my mind, are reasonable, especially when you compare them with their private peers. But the fact is also that when the chairman or the management says that they will go faster than the industry, I don't think that that is possible, because what that implies is they will increase their market share, which is actually not what is actually happening. The LIC is losing market share, although slowly, right? So it doesn't mean that we will, or it doesn't mean that LIC is going to do really well. It's going to be a good company. It's going to be stable. I don't see that it is going to be a huge outperformer anytime in the future. So people who want stable, maybe good dividend paying companies may want to have them in the portfolio. But people who are looking for growth, LIC may not be the most optimum choice for them, in my opinion.
Aditya, your advice to current investors and those who are perhaps now looking at entering LIC, do you think it's a viable option, a good bet?
Sure. So part one, investors who are already inside, right, and they have already formed their view of the company, and for them they have given a higher weightage to the positives over the negatives. For them and for the people that want to get in, right, just keep on continuing the market share, like Abhishek just said, because LIC is losing their market share. Their value of new business premium has also fallen down. Value of new business premium for them is close to 10%, whereas for the private counterparts it is 20-25%. And of course, LIC has taken some actions in the past which have been really not in the interest of their larger shareholders, such as bailing out a few IPOs in 2018 and then merging IDBI Bank into themselves, right? So keep a track of all of these factors, listen to the management, and just keep a track on the deliverables. Are they able to grow faster than the market? Are they able to claw back that market share that they have lost? And then maybe you can build up upon your existing conviction or build up a new conviction.
All right. So, not a great day for those looking for listing gains, but nothing takes away from the fact that LIC has a dominant position in the insurance space, especially in life insurance. As of FY 2021, They're at 77% of market share as far as individual insurance policies go. And with the kind of paltry insurance penetration in India, there's only one way to go for them, which is up. But perhaps it's for those who have patience and can wait the long game. Thank you so much to all of you for joining us today.
Thank you.
Not, there's little doubt that the entire fight happening in full public glare